All right. Good evening, good morning, good afternoon, wherever you are on this beautiful planet. Welcome to the Inner Circle Live Asian session. I'm your host for tonight's session, Benny Allen, and I'm definitely happy and grateful, as always, that you all are here with me this evening as we take a look at the technicals and the fundamentals to see what we can take advantage of in the Forex market. So, without further ado, let's make sure that we turn off any and all distractions for the next hour or so. Grab a pen and paper, take lots of notes, and let's make sure that we participate and engage, especially for our newer members. If you all can hear me loud and clear, please drop me a one in the chat so we can get this session off and running as we look to close out what has been a busy, busy week. All right, I appreciate that. All right, so let me make sure I've got everybody set up. I think we are good to go. Close this out and get right down to business. So today, the 23rd, we know that we had some rate decisions and some policy statements coming out of the Swiss National Bank and the Bank of England. And they came through at forecast, right? Swiss National Bank came through 50 basis points, right? So went from 1 to 1.5. And then we saw that the Bank of England came through with their policy rate hike as well, went 25 basis points to 4.25. So that's where we are. I was reading a few articles this evening, and we can see here, this is from Scotiabank. The BOE hiked 25 basis points, as was largely expected by economists and markets in a 7-2 decision, with two members again voting for a pause, right? So kind of similar to the US, where there was some consideration in regards to pausing rates, but the majority ruled, right? 7-2 decision. So 25 basis points BOE. We think today's hike will be the BOE's last, given the statement in minutes. We think today's hike will be the BOE's last, given the statement in minutes discussion of inflation set to undershoot the February NPR's forecast, thus not showing evidence of more persistent pressures. Okay, that's significant when you're talking about forward guidance, all right? The BOE also removed its judgment that inflation risk remains skewed significantly to the upside. In fact, the communications are biased in the opposite direction, though it is clearly not stated. So this here is a pretty good article to read from Scotiabank, right? So that change in the rhetoric, okay? Even though they had a CPI that came through at 10.4 for February, right? It's looking like the other data points that they're looking at showing that inflation is set to curve to the downside. All right, so over the medium term. So I will put this in the chat, this article here, for everyone to read in greater detail. Then we have the Swiss National Bank. Swiss National Bank says crisis halted as it hikes rates. So it said, hey, we got it under control, right? Number one priority is still, right, inflation. Even though when you talk about Switzerland, the inflation is nowhere near to the upside like in the other countries, not dealing with as high inflation as some of your other central banks. See, it stands at 3.4%, and it's far above the target of 0 to 2% range. But we know where we are in other countries in regards to inflation. They're sitting at 3.4%. They're saying, hey, we've got to get this under control, right? And said it cannot be ruled out that additional rises in the SNB policy, Swiss National Bank policy rate, will be necessary to ensure price stability over the medium term, right? So saying that it can't be ruled out, all right, for more rate hikes in the near future. So here's another article to read. This one is for the Swiss National Bank. Let me copy that and put that in the chat for everybody so that you have it. So there we go. Right. It's a busy week. Also for the US, okay. unemployment claims for the U.S. came in, right? The forecast was 198 for unemployment claims. It came through at 191, so it beat forecasts. All right, so that labor market, right, still pretty good in the United States. So we'll continue to keep a close eye on that. Now tomorrow, typically Friday, is not going to be a slow Friday as we have a ton of PMI data coming out for the Eurozone. We got retail sales for the UK. What else do we have? We got retail sales for Canada as well. We've got PMI for the United States. So it's just been a super busy week, right? So lots of good price action and volatility to study during a week like this. So coming on over, hey, let's take a look at the, before we do that, I need to go over, take a look at trading economics. Recent article, Japan inflation rate eases from a 41-year high, right? So we know there's been so much talk over the last several months going into the end of last year about, is there going to be a potential shift in the Bank of Japan's monetary policy with the negative interest rate? We know they were feeling some inflationary pressure, but they said, hey, we're gonna let the free market play out. And now we see that Japan's inflation rate eases from a 41-year high, right? So it's starting to slow. We see UK consumer sentiment improves. It's a lot of back and forth, everybody, right now. So in the UK, consumer sentiment improved to a 1-year high. And then in the United States, new home sales are strongest in 6 months. And at the same time, gold hit $2,000. So then you have in Australia, where manufacturing PMI fell to a 34-month low to 48.7, right? So it was 50.5 in the previous month for March. So they're showing some contraction, right? Some contraction in manufacturing output. So yeah, it's a little bit all over the place, but it's all right. It gives us good price action to trade. So let's take a look at the dollar index. Hopefully, there we go. All right, so we've been talking about this potential for a crown, and we see that the dollar is still moving to the downside, right? Held at that weekly resistance level, and has been moving down, right? Especially since the FOMC and a little bit of change in the rhetoric in regards to the forward guidance for the Fed, and we see that we've got that downside action going on. So this is the 1 hour. So this right now is just that classic crown playing out where we have a reversal in the price action. Okay. And this is what's considered to be, right, for the time being, a bearish crown. Okay, so we have, if we run our trend lines off the low, 1, 2, and straight through, come out of the zone there, boom, right, and we work our way through that highest point in the price action. Trend lines help you with direction, speed, and momentum of the market. Okay, shows you where price is reversing and potential entry points. Yeah. So you can see you have your inner, right, your outer, your long-term trend line. Okay, and you have a more aggressive inner trend line here as you try to work your way through the highs without going through the wicks. Okay, we don't like to go through the wicks when we're drawing trend lines, okay? Because that wick represents price action, okay? Price was once there, okay? So we want to make sure that we don't go through our wicks, right? That's how we do it in the Forex trade room, because that's how we were taught through our mentors, from by our mentors. So this is where we are, right? So you can see how we've got the inner trend line breaks, and we see how price action has just continued. You can see here where we have this major low, right here. There. You can see how price once it reversed and came down, it didn't hold there for that head and shoulders type structure. It broke, and then it pulled back above that level. Okay, that's your classic crown type formation. Right, really good reversal pattern. And then your fib then runs like this off the highs, right? Yeah. Okay. Like so. So there you go. So there's the pullback, right? Just about to the 50, right up against daily resistance. And then we got to move back down, back to the downside. So we'll continue to watch, right? The dollar could be a tricky one, right? Especially during times like this. There's a lot of back and forth in the market. But for right now, that's right on point in regards to the price action. Any questions on that? No. All right. All right. So we will keep it moving. There are just a few pairs, right? So we know we've already got some positions running, but there are a few that I'm really keeping my eye on that I wrote down today while I was taking a look at the charts. One is this Euro CAD. Right, so we know, right, that CAD, right, is taking a beating. We've broken above that 146 level, and we're moving to the upside. This is the weekly chart. Okay. All right. So we can see here, right, where you kind of have that shallow head and shoulders type price action. See here? Yeah. And so we've got it held at this 142.33 level, and it pushed off. Okay, so it's a pretty aggressive move. So what I'm looking at here, okay, is that nope, we never got a 382, but we double bottomed here at this 236 level, and it's just accelerating, right? It just tells you who has control of the market. And Joey, about a week, at least last week at some point, Joey, we were having that discussion about this level here, and you can see that it held, right? We were thinking that, hey, that level might hold, and that's exactly what it did, right? It held and it reversed out. So now what we have to think about is now that I'm above 146.43, which is a major weekly level, we formed a high here, a daily high at 147.81. So now we have to think to ourselves, you know what, with this momentum on the euro, do we correct briefly to the downside and test this 147.81 as daily level? Okay. And if that holds, do we entertain getting long? Because the momentum from that euro has been so strong, right? Next target would be that 151.10. That's a monthly level. And then you got your D extension beyond that. We're right here in this 127 zone, right? So we want to watch this closely. Past resistance becoming future support, possibly. So if you bring this down to the 1 hour chart and you look where we are in the current wave sequence, okay, we're in an up retracement zone. So what I want to keep my eye on as we move into the end of the week, right, and moving into next week is, hey, can I get price to move down to that 147.81 level? Okay. See if we can get a swing low to form, past resistance becoming future support. If we can get it to test that level, right, and that euro continues to be a strong bull, then we at that point potentially look to make the play, right? It'll give us a nice deep retracement. We're within our AB boundary. And we can look to see if we can get long on that, right? So then that scenario will look something like this. Get down to our 786 level. Stop loss in there. So, and if we stay in that zone, then we look for a 127 extension on the high side, right? If we can get that continued bullish move. So that's a potential setup. So if we can get it to come down to that level, then looking at, call it 50 pips. Oops. $50 there. Then if we can get to that extension, looking at 190. Okay. So plus 190. Okay. Now, if you're still working on holding your trades, right? We always talk about how, hey, it's all on how you manage it. And you can take profit along the way, right? Like some of us may take profit at the B boundary. You know, you may take some of your money off the table at the B boundary and then let the rest ride, right, to the extension. But that's how we develop the trade ideas, just like that. Any questions on that Euro CAD? That'll be a fun one to follow to see if it actually can make it down to that level and hold that daily support. No questions? All righty. Well, I'm gonna roll to the next one, right? We started to get towards the end of the week. I started thinking about next week, right? Got other swings running, right? So we started thinking about, you know, what else is setting up when we talk about the fib sequence, right? We just keep them running. We just keep them running. So another one I want to take a look at is the Euro USD. Okay. So if we continue to get downside pressure on the dollar and we continue to get a strong euro, right? We like that, right? One extremely strong, 1 week. So we know if we look at it from the weekly, okay, you can see how this is going. We've been moving to the upside. All right. So if the strength in the euro continues, we look for a further move, right? Long. So this is the daily fib that's moving right along. Now, our stochastic up here, right? We're moving up into, you know, being overbought. We're at 89% right now. So the momentum may start to slow, which can lead to a correction, right? So if we come down to the 4, you all can see how this is just explosive, right? And it's amazing how we can over and over again find these opportunities, right? You got a triple bottom at daily support there at 105. Just couldn't break below it. And then we exploded. So on this 4-hour fib, We've got an 8-6 retracement. The market took back 86% of what it gained to the upside. Up retracement zone. Now we're in that C to D push zone. See? Now, on this 4-hour, we got a projected extension at 111.31. Okay? So this is how we can set these, short-term, medium-term, long-term targets using the different time frames. Right? So we know that's a 4-hour D extension there. If we go back up to the daily for the long term, and right now, we've got a 61.8 pullback on the daily fib. So right now, the projection is a 1.618 D extension. Okay. So that could be a long-term target. Okay. Our top-down analysis is very important. So that's the daily level, like so. So if we come down to the 1, we can see that we're 1, 2, 3, 4 fibs deep now. So here is our 4-hour 1.18 D extension. Okay. It's just layers, right? Fractals. Here's our daily 1.618 D extension. So now we're giving ourselves some targets. Bear with me, everybody. I'm messing with it. Major delay. They did send out an update for Smart Trader. It is version what is this? 7.47. So some patches that they added that's supposed to correct a lot of stuff. Now, I don't know if I'm gonna have to clear out my entire workspace and do all my charts over again and start them anew, but one of them was supposed to be to fix the sort, the sorting ability for the workspaces. So right now, if you moving it, you put it in alphabetical order, it doesn't stay in alphabetical order and it used to. So it's supposed to fix all of that. We'll see what happens. But now this is a 1-hour fib. So the key, right, that we have to watch is it still breaks and retest. Okay. So we've broken this 108 level, key level, it's a daily level. And now price is trying to come back to test it. So what's going to be fun to watch is to see if we can retest this 108 and does price hold, right? Because then we put ourselves back, right? Kind of in a similar scenario as the last pair we just saw. If we hold, do we reverse out and continue long? Now, the short term, if we hold in this 61.8 zone, extension is going to be there. So that's my 1 hour. 1.68 D extension. So that's how you set those swing targets, right? In the short term, medium term, long term. See? I got my 1, my 4, and my daily all being reflected on my 1 hour chart. Okay. If you use the 15-minute chart, you would be able to see the same thing. So if my directional bias is long, this gives me some ideas of potential targets. Right? And that's how you use fib retracement levels, and you put it together with the extensions. Right? It's just math. So there we go. Right? That's that. So the key is to see, do we hold at this level and it's reversing. Okay. And you do the same thing over and over again, right? If we hold at that level, define our risk and our reward, right? So we come down to that level and we hold there. Okay. There. Okay. I stop below the A, because if it doesn't take out the A, it has no choice but to go your way. You divide your risk by your stop loss. Okay. So that's how you would do it. So you say, you know what? I got a potential setup where I'm risking, call it 50 pips again. Minus 50 there. And my upside potential, right? There. Call it 200 to the upside. And that's on a 100, that's on a 1 hour chart. These type of plays happen all the time, right? If you frame the price action out properly. So there we go. That's what that would look like. Now, if you get stopped out, right? We know losing is all part of the game. We don't worry about it. Why? Because our risk management is stellar. So whether this stop loss is 50 pips or 100 pips, if my risk is 1% and I divide my risk by my stop loss, guess what I'm going to lose? 1%. All right. Think you bottomed out on the DXY for now. I got my Fed running on a U, got rejection for the key level 109, 6 of the daily pin bar. We'll see. We'll see. The dollar's bouncing around, right? So it may correct, right? It may correct to the upside, Reese. I can roll with that observation. All right. So it may be due for a pullback. You never know with the dollar these days, right? The way the market's bouncing back. So we'll see. We shall see. Yep. Appreciate you sharing that. Something to keep in mind. All right. So let's see what happens. Let's see what happens. Wait for confirmation, right? Do I get a trend line break? Higher highs and higher lows. Okay. You could drop down to the 15 and enter. Right. So what looks like this. Okay. Let me move this over. So what looks like this on the 1 hour chart, right? So this is my candle here. Okay. This is gonna be my candle. So what looks like this on a 1 hour chart, and then say we get a bullish engulfing candle to the upside like this. I'm gonna draw this. I'm gonna widen this out. This, okay, and this is gonna be my bullish candle that breaks the trend line. Okay, you guys just imagine this. So sometimes why we drop down to the lower time frame for an entry is because this is maybe one candle here on the 1 hour, but on the 15 or the 5, that price action looks like this. right? So there's price action within that candle. And if you draw it, because the top-down analysis, right? We talk about fractals all the time, that each time frame is just a smaller representation of the higher time frame. So one way that you could play reversals is that if you get price to hold at a level and it's in your zone and it reverses out, sometimes you could drop down to your lower time frame, and that's where you can play your break and your pullback, like so. So if you get this break on your 15-minute chart, support holds, and we get a break, then you say, you know what, I like trend line breaks and pullbacks. Well, you may not want to wait for that on your 1 hour, but if you go down to your 15, you may get a break and a pullback. So then you can pull your fib out on your 15 like this. And then look to enter that trade. Okay. So then my stop is here, below the C, but I'm doing it on the 15-minute fib, like this, right? So now this is my ABCD way, see? Like that. Pick the wrong tool, sorry. Like this here, see? Right? And that's just a smaller way. Everybody follow me on that? Yes, no, kind of, sort of? Right? Yes, okay. Right, so that's something to always think about when it comes to your entries, right? That's why we always say that patience pays, right? So be patient. Let it come down into a zone, right? If that dollar has bottomed out and we continue to see euro weakness and dollar strength, which pushes this euro down further, if it never breaks your trend line, if it never settles, guess what? You're not in the trade anyway, right? You're not in the trade anyway. So now my idea is just invalid, right? But I didn't lose anything, right? If I wait on that extra confirmation, right? So that's how that works when you're working through the time frame. And of course, you can do that on the current time frame, right? You can wait for price action to take off, right? You don't have to drop down to the 15, right? You just do that if you want a tighter entry, right? But you could let price reverse out at this level and show you that it wants to make higher highs and higher lows. Right. Like so. Let this price take off and then come back to you and do the same thing on a 1. Right? Just a longer wait. But when you have, 200 pips or so to go to an extension, what's the rush? Right? We know unless there's a huge fundamental occurrence, price isn't just going to shoot straight up like a rocket, 200 pips. It's going to make waves on the way up. Right? So you can do it like this. Okay? You can do that as well. All right, so just some different entry options for everybody, right, to think about, right, as we get our technical analysis down. Any questions? No? All right, I think there were there was another one that I wanted to take a look at. The potential. Now, this one, and I'm playing this because the cat is so weak, But this one reads might play right into what you're saying about the dollar if it bottoms out. I'm paying attention to this UCAD setup, right? So if it bottoms out, you can see here what we've got here on this 4. See that? All right, that's starting to make some headway to the upside. You in that one too? For sure. Yeah, that's starting. As a matter of fact, I need to get on that because that I was waiting to see if it got back above that level in this next 4-hour set. So yeah, that's looking like that's poised to break out. So that's a good one. So I buy too much whipping around. Yeah, it's dancing for sure. It's hard to stay in those when they're dancing around, right? I was looking for some more momentum to get going. It looks like it's trying to, right? So we got this bullish candle, it's a 4-hour candle, we got some indecision and a continuation, and we've got a stochastic that's in the buy zone, right? So you got a little bit of a morning star type of setup here, right? So where you had your decision to the downside, some indecision, and then it's starting to make a move. So that one is the UCAD can always be interesting, but put a small position in on that, and if it picks up, you just ride the wave. So it is looking pretty convincing off that 137.09. That's the level I was watching here. So we shot off that 61.8. All right, we shot off that 61.8. So if that dollar gets strong and that euro is still pretty headstrong, you might get some consolidation around on that euro USD. Who knows? It just depends on how many people are trading dollars for euros at this point in the market. So yeah, so I mean that's right on that level. I missed that one because I was just hesitant with these two levels here, but it's breaking back above it again. So we got a stochastic and a sales zone on the 1 hour. That just means it might just consolidate that 4 hours in the buy zone. So I mean that's what is that? 61.8 level, 115. We get up around at 345. Yeah, that's worth a shot. It's a lot of upside.
Like then.
What'd you say, the 15?
Yeah.
Let me see. See if you can catch that leg that's running. Let me zoom in. I'll run it off this level here. Okay. That's moving off of 382. Well, that pushed down pretty good. That's gonna run to that extension. We might be off to the races on that one. Right? That's the 5. My bad. Let me go to the 15. Check you out. It's starting to get above that trend. I've been watching it. I've been checking it out. Let me make sure I got this right. Off this 15. Cut the it. Because that's that trend line off the 5 I was watching. There we go. Same result. It's starting to break out a little bit. So it's been super choppy, but we'll see, right? We got this high up here. We're starting to break out. We get above, and we're running to that extension. We're looking for pullbacks and continuations. At that point, be on the other side of that trend line. So that's just a correction and a continuation. Is what I would like to see. Give us a nice flag type setup, full flag. So, yep. So that's the UCAD setup there. I need to get on board with that one. I wanted to take a look at. You took your eye off of it. Yeah. Sometimes it's when you get busy, you have them set up and then you just You miss them, but it's all right. It's another setup always around the corner. But that one's still pretty early in the game. This Aussie Swiss, I look for that to still continue to the downside. It's moving too. So that's the daily chart. What we're looking like on the 4, we're moving down. So that's giving us some good price action to the downside there. You just have to be patient with the Aussie Swiss. But that zone pretty much held up and it's moving. So that's look like that's working out for us pretty good. I don't know what my fibs went on that, but it's okay. I would disappear too. Hold on. I don't know. Anyway, but it's moving to the downside pretty good, right? Moving really well. That's right. Like this. Turn off those levels. So that's most likely going to head to that D extension. So it's the same stuff, right? We set it up no matter what the asset class, no matter which currency it is, right? We're taking the same approach. It really it makes your trading really, really simple. It seems crazy in the beginning. We know, but if you stick to it, right? So you're on that 61.8 level, it stops above the A, and you project the D extension. Okay? Then you just work on. From that point, once you start getting your direction right, now it's all about your trade management, right? How am I going to manage this trade to the downside? Okay. When do I want to take some money off the table? When do I want to take profit? Things like that. Take profit completely. How do I want to manage my stop as price moves in my direction? That you figure out with time. Okay. All of these, for the most part, these Aussies are moving sell side. They're getting a lot of downside pressure. Right. This was starting to turn over again too, right? So you can see, look how it came into this zone, right? So it worked its way up, and now it came into this zone again, and it's holding to the downside, even on the Aussie CAD, right? We're starting to get some downside pressure on it. So that was going to move slow, but that's all right. Look at your Aussie yen. Right, it's quite a few pairs getting beat up on the yen right now. So you can see here on the weekly, we're starting to break below that 86.99 level. And if you just track it down through the time frames on your daily, you can see right out of that. So on your larger play, right, off your 61.8 zone, this is a daily fib. You're looking at above your A 347, but to the D extension, over a thousand pips. Right? They take a while to play out. Yep, they do. But here's your 1 hour, right? We had marked this one up a long time ago. And it's the price action since then has gone our way. Right? Use the tools, right? Use the tools. Right? C and D. Did we come into zoom in on that? I'm not seeing that. We are shy, right? Of that 786. So we look for 1.618 D extension to eventually be hit. All right. So off your 61.8 zone, stops above the A, call it 120, 350. All right, to the downside. Okay. So you can just start out, right? Brian always says, put your toes in the water, right? Let's make, hey, is my direction right? Let's see if I can get some price action in my directional bias. Then on your pullbacks and your corrections, you can add additional positions and manage your trade. So if you trade small and you get hit, that initial position, I'm out of 1%, 2%, right? Whatever you're risking, right? It could be 3%. That's totally up to you and your trade plan, right? But you don't have to put the house on the trade, right? Because if you don't control the market, if you get stopped out, you know already before you place the trade, I'm out of 1%, 2%. But just know that, hey, if I work on my patience, I'll have opportunity to add to the position later, all right? We'll scale into the position. Okay. All right, so that's the Aussie yen and Aussie NZD. Right, we can see just from the weekly, from the top down, ever since that rejection at 110.82, we've just been moving to the downside. Nice break, bearish signal, moving short. Okay. Now, if you miss these moves, don't worry about it. It just cycles over and over and over again, right? Get the good mental reps right now. Right. Again, that's similar, right? We saw that before, right? Where we double topped in the zone, and now we're hesitating here. And sometimes when you get to these levels, right, you can get range bound, right? You can get range bound even. So when you see this, you have to make the determination: how do I want to manage this? Am I good? Was I in this early and I'm good? Maybe I want to exit the trade or take a large percentage of my position off, right? Just, and then once we finally break this level, if we retest it again, maybe I can add back to the position on this way to the extension, right? So it's not an exact science, right, when it comes to how you want to manage it, right? Because it may go from the C to the D, but how it gets there is different for every pair, right? It's different. So that's where we are there. Now this Aussie dollar one is struggling, right? Because of what's going on with the dollar right now. So this one is struggling, right? But it's still within that zone where it's just ranging a bit. But when we looked at this position last night, right, that one, right, it made some good momentum and then it's right back down, right? So it may take out the A, it may not, but right, it's just like it's just moving sideways for the most part. We can't get a continued momentum, can't get the higher high right now. So you're still within that 4-hour 80-20 zone, you're still there, right? It's just moving all over the place, moving sideways, right? So not necessarily trending, right? So we got a high, here's a low, higher low, higher low, and we're right back at the. So we'll continue to watch that. See how that plays out, that opportunity over time. Okay. When you trade small in those initial positions, I tend to just let my trades float. I already know what my risk is. And if it goes in my way, then I'll look to add to the position later, right? That's how I typically do it. Any questions on any of the pairs that we covered? Nope. I want to take one last look at gold, because it's definitely anybody in that gold long position, because it's looking like from that daily markup, it's definitely going to try to head to that D extension. All right, it's running. So here's that daily swing, right in that 61.8 zone. Right, we've been moving up ever since. Right, if we break through that level, we're going. That's, what is that? 20,053. And the high is what has been, what, 2070. Look at that. Right. A month, I know. Isn't that something? But just think about it when you know, and it takes a while. You know, it's not an overnight thing. Like when you develop, right, that patience to stay in those positions and managing those positions, you all are doing phenomenal. Like even some of the newer folks, I see the technical charts being put in there. Like you'll get the technicals down, right? The way we teach it and the structure, like it's the same thing over and over again. What varies is our mindset, right? Our psychology, our risk, right? Our appetite for risk, and to gamble, right? That's what throws us off. That's what steepens the learning curve for all of us, right? That steepens the learning curve for all of us. It's not this. You all will get this, and then the lingo with the fundamentals. If you read enough, right? That's why we like to, post links to articles, because if you read enough, you'll get that down. Like, oh, okay, I get that. I understand why you may not know all the intricacies of CPI and a report, but you know what it means and the key stuff you need to be paying attention to and how it affects the market. You don't have to be an economic genius. You don't have to go back to school for economics, right? But you'll at least know, like, this is important and why, right? So that's the main reason why we cover that. So you'll get that down, and the sooner you get that down, and the more you get the reps, the quicker you're gonna find out that it's really what's between my two ears from that point, right? No matter how many times we tell ourselves 1%, 2%, we get in that urge, and we make positive progress for a few months, and then we get that urge and we take that Hail Mary trade and we get beat, right? We wipe out our gains, people blow accounts. It's all in the mindset and the psychology, right? We a lot of you been with us for a long time, and you see these charts day after day, week after week, month after month, quarter after quarter, and you ask yourself, like, why did I get out of this trade, right? Like, why why did I get out of the euro dollar so early? Hey, I made money, but because now that means I have to find another position to get back in the market and do the work. Like, why am I not in this position to the D extension? Right? It's tough. It's tough. But the thing that keeps you moving forward, that keeps you failing forward, is the idea that when I do finally break past that barrier, watch out, man. There's no going back there. The chief used to tell us all the time, like, once you grow your account to such a large enough size where all you do is trade, you finally make it to where you can consistently trade at a standard, and you can use these wider stops, and you can still trade at a standard, and that standard still represents only 1% of your account, 2% of your account. It's like you never want to go back below a standard, right? You never want to go back. So that's why they always tell us, start out trading those micros and build and grind and work your way to the top in regards to your accounts. Slowly add your own money, because you're going to remember that grind when that account grows, and you're going to look back, and that's going to give you the reason not to risk it all, because you worked so hard to gain it. I hope that makes sense what I'm saying. I hope that makes sense, because I know we're all going through these trials and tribulations with the markets. And like, man, I see it. I see these waves. I see these CWD moves over and over again, but I'm only getting like 10 pips, 20 pips. But then I lose. I'm getting 15 pips out of a 300 pip trade, and then I lose a 40 pip trade, and I look at my account, I haven't made any money. Right? I know how that feels. I know how that feels. Right? So you have to stay there, right? You have to stay there, right? You have to gain those calluses, right? To be headstrong in this market. But you all can do it. We know you can. Right? That's why you've kept at it. That's why you're here. But that's a beautiful move, right? So it's amazing when you read the articles and the reports. When you're swing trading and you understand how to use the fibs, you read it for your overall knowledge, but you don't get caught up day to day. Because if the day to day news was technical price action, it would be just a whipsaw of consolidation. That's how much the opinions go back and forth and everything change. It would just be one big consolidation on the chart, right? But when you're swing trading and you understand the fibs and retracements and extensions and how they correlate, it's like no worries, right? I've got my game plan is mapped out. I know my risk, and I want to see it hit that target. Right? I want to see it hit that target. Right? And I'm not a big gold trader, but we mark it up. We mark it up, right? So that's a beautiful long play there. All right. Any questions before we wrap things up for the night, everybody? It's been an awesome week. You guys have been great. Lots of questions. Got a lot of new people in the group learning. Some of our veterans are really, really collected pips and doing really well. So we appreciate all of you being here and believing in us and believing in what the Inner Circle has to offer. All right. Well, if there's no questions, we are going to wrap things up. Of course, we don't do anything on Fridays, but we will be back 7 a.m. Eastern Standard Time for the Forex Weekly Ritual, which is where we go through these charts and we find those potential C to D moves and those 80-20 moves. I did not cover UJ, and I will take a look at that for you. I did not. Right. That move. Right. We talked about it last night in the sense that, it was a similar crown type of price action that we had on the dollar, right? Almost identical. Okay. So that's your weekly chart. So if this plays out, you got like a ways down that it can go. Like we said, we heard one major banker that was on Bloomberg calling 120. I know we talked about that earlier this week, calling 120 for the dollar yen. And right now it's moving in that direction. It's moving to the downside, right? So it's kind of just like the DXY. Here it is on the 4, right? That downside move, right? If you zoom out, right, off that leg, we're still can't remember where I had that running, but we are still off the up move. Yeah, we're still just barely teetering, right? So there was that 80-20 move that sparked that U-turn because we were moving up A, B, C, Ds, hit that 80-20 zone, and then we reversed, right? So if you look at it to the downside, if it follows this down fib, it's going to take that A out. But that is yet to be determined right now, right? That's in that C to D push zone. So we'll see what happens. We'll see what happens with that. Waiting for the next 4-hour candle. The dollar, man, the dollar is, the markets wouldn't, it's like a game. It's a game, right? To me, it is. It's like, man, it's like the wild card is that dollar. That wild card wasn't always, that wild card that dollar didn't have to be so heavily considered, right? It seemed like it'd be a lot smoother sometimes, right? The dollar or pause are going to range, and then everything else is crazy. I'm in a buy for a while now. Joker does this. Yep. Yeah, because the dollar shows some good strength to the upside. So I get you on that long. You got your stop below that A on that fib. It's still hanging within that AB boundary on the 4, right? So you never know. You never know with the dollar. We've seen 8-6 retracements. We've seen almost 100% retracements and price double bottoms on the dollar, and then it takes back off to the upside again. So just stay with your trade plan. If you got your stop below the A, you already know what your risk is. I wouldn't kill it. I wouldn't kill it just yet. I would let the stop kill it. All right. All right. In that long too. Yeah. All right. So it was a beautiful 80-20 play through the downside. But I was thinking long on that too. I got stopped out of long yesterday on the UJ. I had took it when it made when it had that positive reaction to the upside. I had took it too, and Chairman Powell started talking. My dreams on that UJ long were crushed for the time being. I just think that the technical the technical trade I did for the long right now, like if you played it off before and you get stopped out, that's just like that 80-20 that we were taking to the downside on it. That's just like it's hitting TP3, right? So it just continued to the downside. But I just have a hard time, especially if we do start to see contraction in the markets and we do move into a pretty strong recessionary phase. I have a hard time betting against the dollar as a safe haven, right? Dollars are still very valuable. Invoices need to be paid internationally, right? So I just, if it becomes a severely risk-off market, I like the dollar in most cases, right? Dollar, it may lose out against the UJ because the UJ is a pretty strong safe haven, but we'll see. We'll see how it plays out. But right now, it's making a pretty solid move to the downside. And like Reece said, that momentum maybe it could be slowing right now on that dollar, and it may be great to make a correction back to the upside. That's why I said if your trade plan is, hey, I've got my stop below the A, it's still within that AB boundary. Let it do its thing, right? As long as you got your risk management under control. If you're bleeding really bad, if you're over leveraged, then hey, you cut the position, right? You journal it and you rewind and you figure out what you could have did better in regards to risk management. But if your trade idea is still intact and that stop hasn't been hit, let it play out. Let it play out for the most part. All right. So that is it. We're going to wrap it up, everybody. Hey, I look forward to seeing everybody Saturday, 7 a.m. Eastern Standard Time. Appreciate you all being here. Have a good night.
Thank you.
Thank you.